Hi everyone, I'm Paul and welcome to today's video, which is part 2 in my introduction to ICT's fair value gap methodology. In the previous video, we covered the core concepts of ICT's fair value gap. So if you haven't watched that video yet, you should definitely check it out first. I'll put a link in the description to save you some time. In today's video, we're going to build on those key foundational concepts and introduce market structure shifts, displacement, and liquidity, all of which are integral to ensuring we have a valid fair value gap setup. But before we go any further, make sure you hit that like button and subscribe to my channel. And if you like the fair value gap method, make sure you check out my reviews of ICT's 2022 YouTube Mentorship Program. And of course, make sure you go directly to the source, check out ICT's channel, and make sure you subscribe. I've also put a link to his channel in the description. So now that you've helped me out, let me help you out and let's jump into today's video. Today's video is ICT's fair value gap essentials, market structure shifts, displacement, and liquidity. So we'll just quickly run through the outline of today's video. So firstly, we'll be just covering some revision on what is a fair value gap. We'll cover swing high and swing low patterns, buy side and sell side liquidity, then putting it all together into a framework that we can use in our charts. Then we'll go through some specific trade examples using that framework, using Bitcoin in a long setup on the 15-minute chart from the 1st of September 2022. We'll also use the NASDAQ, this time with a short setup on the 4-hour chart from the 17th of August 2022. So we'll start with some quick revision on what a fair value gap is. So a fair value gap is the creation of ICT, or the inner circle trader, and a fair value gap is a 3-candle formation that can be either bullish or bearish. And essentially a fair value gap represents an area where price is being delivered inefficiently, and as a result the imbalance or the gap is created, and at some point the market or price will go back and revisit that gap or rebalance that imbalance. So this is an example of a bullish fair value gap, and that's our 3-candle formation, so 1, 2 and 3, and you can see we have this big center candle. This is the displacement, and we have the fair value gap formed between the high of the first candle and the low of the third candle. So what we generally see is that second candle will be a powerful up move, and that will be what creates the imbalance or the displacement. Now we'll cover what the displacement actually means when we talk about market structure shifts in the video shortly. And as you'd expect, a bearish fair value gap is essentially the opposite of a bullish fair value gap. So we still have our 3-candle formation, so 1, 2 and 3, and this time the second candle is a powerful down close candle, and this is the one that creates that imbalance and is also primarily responsible for the displacement. But this time our fair value gap is formed between the low of the first candle and the high of that third candle. So understanding swing high and swing low patterns is important because this is what we're looking for when we start to evaluate if we've had a change in market structure or a market structure shift or a break in market structure. They all effectively mean the same thing. And so we have both a swing high and a swing low pattern. So both are 3-candle formations, but a swing high is when you have your 3-candle formation and the high of the center candle is higher than the 2 highs of the candles either side of it. So you can see we've got 1, 2, 3 candles, and we have the high of that second candle, and you can see the high of that candle is higher than both the high of the first candle and the high of the third candle. Similarly with our swing low pattern, it's obviously the other way around. So we have 1, 2, 3 candle formation, and the low of the second candle is lower than the low of both the first and the third candle. So you can see on this example, this is our second candle, and you can see that this low is lower than the low on the third candle and lower than the low on the first candle. And so that's our swing high and swing low patterns. So buy side and sell side liquidity are concepts that are almost exclusive to ICT as far as I'm aware. And we'll just run through some definitions of what they are. Don't worry if this doesn't 100% make sense. When we look at some examples on the charts, it'll make much more sense and it'll start to bring all these concepts together. So buy side liquidity is found above old highs or previous highs. So this pool of liquidity will actually be larger and more significant if you have multiple previous highs at the same level. And this is what we call relative equal highs. Now, the reason why this is important is because retail traders will see these levels as resistance and they'll be going short at these levels, hence why their stops are residing above those previous highs. And the opposite is true for sell side liquidity. So sell side liquidity is found below old or previous lows. And again, this is where retail traders have placed their sell stops. And so as a consequence, we have a pool of liquidity at this level where we have smart money buyers wanting to go long, taking advantage of those sellers. And once again, that pool of liquidity is more significant or is larger when we have multiple previous lows at that same level, and retail traders will see this as support. So they'll be going long at those levels and they'll obviously have their stops, their sell stops, sitting below those levels. And so now we need to put all of these concepts together, because a fair value gap as a pattern, so that 3 candle pattern, is not actually going to give us any kind of trading edge in isolation by itself. If you just use that pattern, it's not really going to give you that much success. So we have to layer in additional criteria to make sure that we've got a valid setup, and obviously we then have a much higher probability of success when we enter a trade on that basis. So the first thing that we're going to be looking for is a run on liquidity. So we're going to see the market or price go into those old highs or old lows, so into that buy side liquidity or that sell side liquidity. We'll have all those stops taken out, and that is going to generally be in the opposite direction of the fair value gap setup we're looking for. So for example, if you're looking for a long fair value gap, so a bullish fair value gap setup, you would want to see the sell side liquidity taken out first. The second thing we're looking for is a displacement. So when we have that fair value gap formed, we're generally going to see either the second candle or just the entirety of the fair value gap create a displacement. Now, the displacement just means a significant move in the direction of the fair value gap. So if it's bullish, it'll obviously be up, and if it's bearish, it will be down. And that move should be significant. It should really stand out on the chart. And the thing where this is helpful is this is going to create our market structure shift. So this is moving on to our third point. So again, this can be called a market structure shift or a break in market structure. And that's where we have either a swing high or a swing low, and that displacement move by the fair value gap, it either breaks that swing high or swing low, which gives us that change in market structure. So don't worry if all of that seems a little bit hard to understand. We'll go through some real life examples and we'll basically create a checklist which you can then go and use and replicate in your trading. So don't worry if this seems a little bit complicated right now. Once we go through those examples, it'll all start to come together. So the first trade example we're going to look at is Bitcoin on the 15-minute chart from the 1st of September 2022. And we're looking at a long setup. So we're looking at a bullish fair value gap, and you can see that fair value gap here in this blue box. So what I've done is I've created a checklist, and we've got this for both trade examples, so we can run through all of those points that we covered earlier in the video. So our fair value gap setup checklist is: first, we're looking for a run on liquidity. Second, we're looking for a fair value gap. Third, we're looking for a displacement. And fourth, we're looking for a break in market structure. So if we look at the price action on this chart, you can see the market trades down. We take out the sell side liquidity first here, so you can see that's this old low down here, and then we trade down a bit further and you can see we take out these old lows here. So this is sell side liquidity, relative equal lows. So we have a number of lows here, and you can see that they're relatively equal. They don't have to be exactly the same, but they're relatively equal, and we know that there'll be stops residing below these levels. So you can see the market takes these out before trading higher, and in the process of trading higher, it creates this bullish fair value gap. And so that's our first 2 points on our checklist covered: our run on liquidity and our fair value gap. Now you can see in the process of this fair value gap forming, we can see the fair value gap forms on this second candle. So remember, our fair value gap is between the high of the first candle and the low of the third candle. And so we have our fair value gap across that second candle. Now this whole move, you can see the displacement, so this move upwards is very obvious. You can see this is where we break market structure just here. So this is our swing high. So remember, our swing high is a 3 candle pattern. So the high of the second candle, you can see this is the middle candle here. The high of this candle is higher than the high of the first candle. and the high of the third candle. So that's the high that we're looking at breaking with this displacement, and you can see we do that on the third candle here. So the market trades up, it breaks market structure, it breaks this swing high, or it trades above that swing high before coming back down into the fair value gap and then trading higher. So in this example, if we'd actually taken this trade on the 15-minute chart, you can see we just plotted out here. And remember, if we were going to take a long position using this fair value gap, you would have your limit buy order at the low of that third candle, and you would have your stop at the swing low down here, or at either the low of the first or the second candle. So that comes a little bit down to situation and your risk tolerance. So you can see, even if we just traded right back to, the top of this move, that's a risk reward of about 1.4. But ideally what you'd probably be looking at is trading back up to this swing high up here. So if we'd use that as our target, you can see we'd get, an easy 2.5 or 2.6 risk return. So that would be a pretty nice trade. So if we move on to our second trade now, and this is on the NASDAQ using the 4-hour chart. This time we're looking at a short setup, so a bearish fair value gap setup, and on the 17th of August 2022. So you can see we've got our checklist again. So our fair value gap setup checklist, we're looking for firstly a run on liquidity, a fair value gap formed, displacement, and then a break in market structure. So you can see, looking at this chart, we have the market trading higher, and you can see we take out this buy side liquidity as the market trades higher. Now in both of these cases, these are both relative equal highs, so we know they're going to be taking out stops as the market trades higher. And you can see right at this point here, we take out this buy side liquidity, relative equal highs here before the market starts to trade downwards. And you can see in this big displacement, we have downwards, we have this bearish fair value gap form. So again, we've marked off 2 points on our checklist. We have this run on liquidity as we trade up, we have a fair value gap formed as we come down, and then we get this displacement here. So you can see these consecutive down close candles is our displacement. It's very obvious on the chart. And then we have our swing low pattern just here. So again, it's a 3 candle pattern. We have the middle candle, the low of that candle is lower than both the first and the third candle. So this displacement breaks market structure, it breaks the swing low pattern before trading back up into that fair value gap and then trading lower. So that's the other 2 points on our checklist, our displacement, and then our break in market structure just there. Now you can see if we've taken this trade to the short side, the same rules apply. It doesn't matter on the time frame. So we would go short at the high of the third candle, and we would have our stop sitting at the high of the first or the second candle. Then we would just pick the most meaningful target. So we'd look at either imbalances or where we think sell side liquidity would be resting. So for example, you could target these lows here, and if we did that, you can see you get an easy 2.5 risk return. Now, if you wanted to be a little bit more aggressive, you could potentially say target this imbalance down here. So I generally target the center of those imbalances, and you can see you're going to get a risk reward of about 4 times. So that's pretty good on a 4-hour chart. So that was a deeper dive into some of the core concepts of ICT's fair value gap method. I hope that this video helped you to better understand fair value gaps, and that the real life examples help to consolidate this learning for you. There are so many ways to use fair value gaps in your trading, so make sure to do lots of forward and backward testing, and you'll be amazed at the use cases you can find. If you're using fair value gaps in your trading already, make sure you let me know in the comments, as I'd love to hear how you've integrated them into your trading. I'll definitely be sharing some of my findings in future videos, so make sure you look out for those. So if you enjoyed this video, it would be great if you could like it, because that helps other people to find it. And if you'd like to see more videos like this one, make sure you subscribe to my channel and turn on notifications so that you never miss an update. Thanks for watching, and I hope to see you next time.